Hey everyone, welcome to this week's Global Market Outlook. I'm Tolga, and today I'm here to chat about the latest market trends, economic news, and global market events that shaped last week and are set to influence the markets in the coming days. We have got a lot to cover, from mixed moves in US stocks and gold hitting new highs to central bank decisions and fresh trade tariffs. So let's break it all down in a friendly, easy to follow way. Let's start with a quick recap of last week's performance. Last week started off a bit rocky for US equities. The S&P 500 and Nasdaq fell by about 1% to 1.6% early in the week, mainly because tech stocks took a hit after a new Chinese startup DeepSeek stirred up some competition. On the bright side, even though things were shaky at first, the Dow managed a small gain. And overall, January ended on a high note. The Dow jumped over 4%, the S&P 500 was up nearly 3%, and the Nasdaq added about 2%. The US GDP for Q4 came in at an annualized 2.3%, a tad below what we expected, but the year still wrapped up with a solid 2.8% growth. Plus, companies are doing well, with a projected 13.2% increase in fourth quarter net income, beating earlier forecast of 11.8%. The Federal Reserve decided to keep its interest rate steady, while the European Central Bank went ahead with a 0.25% rate cut as part of its easing cycle. We are also keeping an eye on other big players like the Reserve Bank of Australia, Bank of Japan, and the Bank of Canada as they navigate through some uncertain global growth. Gold had a standout moment, climbing over 1% to break the $2,800 per ounce mark, thanks to its safe haven status amid ongoing inflation worries. Meanwhile, US core inflation, measured by the PCE index, is still lingering at 2.8%, while overall inflation remaining above the Fed's 2% target. New tariffs on Canada, Mexico, and China announced by US sent shockwaves through the markets. Tech stocks like Nvidia took a hit, while other areas like social media actually saw gains. Around the globe, things were a bit mixed. European stocks like those in the Euro Stoxx 600 soared, but Asian markets including Japan's Nikkei saw only modest gains. Bond investors reacted to policy cues and rising yields and the US dollar strengthening, especially given the recent tariff news. What's coming up this week? Now let's look at what we've got on the calendar for this week. Monday, we kick things off with key data release like the Institute for Supply Management Manufacturing Index and US Census Bureau info on construction spending. These numbers will give us early clues about the health of the US industry. Tuesday, keep an eye out for the job openings and labor turnover survey, plus factory orders from US Census Bureau. These reports might hint at changes in manufacturing demand and the labor market. Wednesday, midweek, we will be watching the ADP National Employment Report, the ISM Non-Manufacturing Index, and the US trade balance. These figures will help us understand labor trends and consumer activity. It is all about productivity, labor costs, and weekly unemployment claims on Thursday. Plus, we will get updates from US Treasury actions and mortgage rate news, which are key for the bond market. Friday, the big event is the US jobs report. Expectations are for around 256,000 new jobs in January. Also on Friday's agenda are the University of Michigan Consumer Sentiment Index, early consumer credit data, and unemployment rate forecast, expected to be around 4.1%. On the European side, all eyes will be on the ECB's easing moves and upcoming policy updates from the Bank of England as they deal with slow growth. Meanwhile, the Bank of Japan and Central Bank in Australia and New Zealand will share insight into their regional economic conditions and monetary strategies. And don't forget the ongoing geopolitical drama. those new tariffs could continue to stir things up in the markets. Wrapping it up, last week showed us a mix of strong corporate earnings, cautious economic data, and rising geopolitical tensions. The key takeaways: January's equity market showed some solid resilience, inflation remains a tough challenge, and markets are highly responsive to central bank policies and new trade tariffs. So, what do you think will be the biggest mover this week? The US jobs report, central bank signals, or the ongoing trade tariff drama? Drop your thoughts in the comments below. If you enjoyed this update, please give us a thumbs up and subscribe for more weekly market insights. Thanks for tuning in, and I will catch you next week.